Hey there, traders. It's Ace in Trading. Just wanted to do a quick weekend review. I'll go over the kind of the state of the market as far as the indexes and the breadth and the sectors, just to kind of give an overall perspective on where things stand after the last week or two. I'll also go over some recent trades that I've taken and kind of the outcomes of those. And then I'll finish off with what I did before, where I scanned a broad group of stocks and then go over how I would use that list to either study recent moves or to find potential setups for the coming week. So as far as the market is concerned, if my charts would load, when we look at the major indexes, these four charts, as I've explained before, the large cap is on top with the Qs and the SPY. And you can see, we have an upsloping 50, we have upsloping 10 and 20. So these large cap indexes have been in a decent uptrend for, 4 months now. And it hasn't been, totally easy. You can see there's these brief periods where we've had some decent pullbacks. You had all the sloppiness with the CPI and the PPI, and it's certainly been a bit of a roller coaster ride, even for the large cap traders. But you can see this trend remains intact, and we can sit here and guess and predict on when the trend might end, but it's a fruitless endeavor. You're only going to know the trend is over in hindsight. So the trend is your friend until it ends, as Ed Sekoda would say. So for the large cap traders, there's probably been a lot of decent trades, and if you just kind of trail and stick with your stops, then you're probably doing just fine, despite a little bit of sloppiness here and there. Mid and small cap land, it hasn't been as easy of a ride. You can see November and December of last year had a pretty good trend, and then we had this multi-week just slop fest here, which made things a lot more, really challenging in the beginning of the year. So January was not an easy month to trade at all on the long side. Very choppy, very sloppy, difficult to make progress. And you can see this gap down here, and then all this back and forth stuff. This is just kind of that sloppiness with the CPI. But overall, you can see it's sort of the same thing, where you have this upsloping 50. And then you have this, currently we have upsloping 10 and 20. So as long as this trend remains intact, you want to trade in the direction of the trend. Obviously, take good setups, and if you get stopped out, you get stopped out. But these are the kind of markets that can go on for weeks and months, much, much longer than anybody can predict. So I would not be in the mindset of thinking you're going to predict when this thing's going to roll over. It's a pointless endeavor. So just trade in the direction of the trend, and then as long as these highs are getting higher and lows are getting higher, that's essentially what you want. That's the definition of an uptrend: higher highs and higher lows, and you have these moving averages sloping upwards. So don't fight an uptrending market. Do it to your own peril. So we have a pretty good state of the four major indexes. Even if you look at the sectors over here, most of your big winners are going to come from tech, from healthcare, from cyclical. Sometimes financial and industrials has a decent pool of stocks that end up being big winners. And a lot of these other sectors are really cyclical, based on interest rates and economic factors and things like that that really strongly influence some of these other sectors. But the fact that we have healthcare, tech, consumer, financials, all these stocks are in the top, or these sectors are in the top 5. That's a pretty good sign. And even without looking at the charts, I can just see these check marks. The 10 is sloping up, the 20 is sloping up, and the 10 is over the 20 for just about all of the 11 sectors. So that means not only do you have this nice representation here of the large cap charts are doing great, you also have the sectors that make them up that are doing just fine as well. And comm services is not necessarily in a good uptrend, but I don't really give a shit about comm services, to be honest. It's not really one of those areas where you're often going to find uh, big movers. Same thing with like utilities and real estate and stuff like that. Is every now and then you might find something, some random ass stock, but it's just not where you should focus most of your attention. So overall, the state of the market is pretty healthy. I mean, that's not to say it's easy. Like if I take this breadth chart here and I just zoom out, like when you get to the day to day, it gets a little sloppy. But if you zoom out, and I talk about this a lot, if the market gets into moods, the market does not just go straight up, and you get these periods. These red periods here are periods where things are extremely difficult on the long side. It's very sloppy, very choppy, and making progress during these periods of time is very difficult. And then sometimes you get these large chunks of runs. This was November, December of last year. You can see it was in an uptrend for a good portion of that period of time. And yeah, there were some periods of time that were probably challenging, and you had these pullbacks and sloppiness, but no one could have told you in November that you would have had a 2-month uptrend, because if you look at this period of time here, like this block here, it starts off exactly the same as this block here, but you can see the outcome is significantly different. If you're in the middle of a longer term correction, you might just get a couple of updates and then you're back to downtrend. You get like this is the market attempting to rally, and then the supply just overwhelms the demand. Whereas here, lots of demand, supply comes in, but then demand kicks right back in. And this is in a healthy uptrend. That's exactly what you want to see. You want to see supply trying to take over, and then it doesn't. Like the demand steps up and it just kicks back and it kicks the trend back up. And so all these periods of kind of choppiness and sloppiness within this uptrend, this is the sellers trying to take the upper hand and they just can't do it. And the buyers are in control. And at the end of the day, supply and demand is really what you need to focus on, not predicting what the market's going to do. Because we don't know how long an uptrend will last until after it's over and we're looking at it several weeks or several months later. So the market gets into moods, and there's nothing you can do about it. You just have to manage your risk and manage your trades the best you can. As far as trades that I've taken recently, if I pull up in my log here real quick. So these are the 3 that I have remaining. If we look at Palantir, this one was doing okay, and then and this, it looks like after the close, it had a decent sized sell off after the close. So we'll see how this thing acts. You can see my buy point here. It really hasn't done much. It's just kind of grinded higher, which is not exactly what you want. So right now I'm sitting at a little bit better than break even on this trade. We'll see how things go on Monday, but it looks like this thing is probably going to get cut. I was hoping this thing would break out and go on a decent move. It's just not in the cards. It's looking like at this point. Same thing with Frog. Like I got a decent entry on it. I've just been kind of trailing my stop up. And you see this really low volume sort of creeping sideways action. I haven't really added to it because it really hasn't given me any sort of high volume breakout to add to. So at this point, I've just been kind of moving my stop up little by little, and you can see I'm better than break even on this trade. And if it can break out, I'll add to it. Otherwise, like who knows? Everybody was following this gap because this was very news driven, and people were really interested in this stock when it broke out here, and then it just hasn't really done much since. But the good thing is it's a decently volatile stock. It has decent earnings and revenue, so it's a good growth stock to focus on. It's just right now it just hasn't really done much. App had a pretty good close on Friday, so I'm actually pretty happy with this one, how it's been playing out. I got in initially on this gap day after it pulled back with a stop at the lows. It kind of chopped a bit, and I trailed it, and then I added, and I've just been adding and trailing. I almost got stopped out here, I think by a couple pennies, to be honest. I think it was, 10, 20 cents. I was about to get stopped out. because it almost violated this prior pivot, but you can see it like held right above it. And then once it held and stabilized and moved back out, I actually added more to it. So I've added to this thing a couple times. I'll probably be at the point soon where I'm taking some partials. But right now, got a nice risk-free trade. It's oversized because I've been adding to it. And, you know, this thing has triple-digit earnings growth. It has pretty good revenues. It's decently volatile. It's a very, very liquid stock in the tech sector, which is a leading sector. So, you know, this thing so far has been doing pretty good. As far as other ones that I've been messing around with, this one, looking after the fact, it looks kind of shitty. One of the challenges with these uber high ADR stocks is sometimes you don't get a 3 or 5 or 10-day pullback. Like, they just don't wait around that long. So oftentimes with these super high ADR stocks, I find myself having to kind of jockey myself into these little short-term consolidations. So, you know, I bought this breakout of this consolidation, and it started off fine. Like, I thought it was going to break out and you know, run off to the races. It just it never really got going. Rolled over and stopped me out. And this is kind of what a normal stop out looks like. You know, not every trade's going to work. And to expect every trade to work is, you're going to be highly disappointed to find out that many trades don't. And that's what I was talking about the other day with Dave Landry's comment on swing trading. It's streaky, it's skewed. You know, like, a lot of your trades are just going to be slop. Like, it's going to look exactly the same as any other trade. It's going to look great as soon as you enter it, and then it's just going to roll over and do nothing. Or it's going to look like one of these where it looks great at the beginning, and then it just it doesn't really go anywhere. And there's nothing you can do about that at all. That's just the way trading goes. So, you know, CXAI, just a normal stop out. It did not go where I thought it would. It could. I mean, if this thing kind of tracks sideways for a few days, maybe it can actually stage a breakout. We'll see what happens next week. QBTS, I think this one's been slopping me around a bit. Yeah. So, you know, this one I tried to jockey into this one as it was coming above this range, and it literally just died right out of the gate and stopped me out. And it had this high volume day this day, but like I didn't end up getting it here just because it reversed, and I was not actually watching it that day. If I remember correctly, I may have actually gotten into that thing potentially. But, you know, after a day of calm, it tried to break out here. That's where I got in again. And again, it's kind of same result. This thing hasn't really been doing a whole lot. It's a little bit on the thinner side. Super high ADR. It's one of those stocks, you know, it had a really nice strong move. It was tracking sideways decently. And, you know, it looked like it was going to break out. It didn't break out. Again, that's just how it goes. SOUN. So this one, this one trade alone pushed my account up 18%. Just this one single trade. And that's, again, that kind of goes back to Dave Landry's comment of swing trading being skewed. Most of your trading results are going to come from a small handful of really big winners. Everything else is really just kind of like slop. It's like base hits, doubles. Every now and then you get a triple, but then like you're getting losses at the same time. So a lot of that just kind of, in some ways, it just evens itself out. You're like making slow, really incremental progress in many cases, and then all of a sudden you get a trade that's just like bam, it just like shoots your equity up. And could I have told you ahead of time that SOUN was going to do that? No, absolutely not. I just identified the setup, I entered it, I put the right amount of risk, and I was actually able to get a fairly tight stop on this thing just based on where I got in. So I got a tight stop, my position size was relatively large, and then, you know, I took a couple of partials on the way up. And you can see, like, I didn't take my partials exactly, you know, at the peak. That's never going to happen consistently. You just, you know, you lock some in, and then earnings was after the close on the 29th, I believe. I don't like to sit through earnings, so I sold the rest of my position about midday on the 29th. And then it ended up gapping down on Friday. So Overall, I think I played this one really well, and this one trade has been one of my biggest winners of the month so far. Not the, when I say the month, I mean February. It's actually March. I keep forgetting it's March already. I'm looking at some of the trades over from February. So SOUN was a really big winner of mine. RGTI was another decent stock. Again, I just stepped up to the plate. I bought it on this breakout, stop at the lows of this pivot, and then I ended up taking a partial at a function of my risk. And then this thing kind of tracked sideways, and the volume kind of came in nicely. So I added back to it. It actually broke out above this range. I added this portion here that I sold. I added back, and then I actually ended up selling this thing really, really nicely. And this is luck. I mean, this is hindsight luck. Uh, right now, I can't exactly remember why I sold it at this point. Sometimes I have work obligations. I have things that happen where I can't be there to look at things. So sometimes I sell things even when maybe I should hold it. And sometimes I get lucky, and sometimes I don't. It's just part of trading. Do what works for you. I can't be at my trading desk all the time just because of work and family obligations and things like that. So I do the best that I can to manage all that stuff. So RGTI, this ended up being a pretty good winner for me as well. Aspen, yeah, this one a little irritating, but this happens. And I don't manage trades perfectly myself. Sometimes I manage them really well. Sometimes I mismanage them. This is one where I felt like I got a pretty good entry. I think my stop was below here. And then once this thing broke out on the morning of the 29th, I ended up snugging my stop up to below the gap, because it's like, okay, that's a reasonable place. I would expect if this thing gaps up that it's going to keep following through. But it doesn't care what I think. So it obviously it rolled over and it stopped me out. And it's not like my loss was that big, but it's like if I hadn't cranked my stop up after this gap, I probably still would have been in this thing. But it's just one of those things in hindsight. You can kick yourself in the ass for every mistake or for every mismanaged trade, but just do the best you can over a series of trades. You're going to make mistakes. You're going to do things that you look back later and you're like, why the hell did I do that? Sometimes it just happens. All right, so Aspen, talked about RGTI, CLSK. This one, I mean, had a really good entry, had a good partial that I took off, and this thing just kind of rolled over and died. We had this really big sell-off bar here. So that was a 13% drop. That's was kind of unexpected, just based on the fact that it was so wide and sloppy and loose. I took a partial here, and I ended up closing out the rest of the position here. And so far, that's been a good decision. If this thing tightens up and sets back up, maybe I'll get back into it. But there was a ton of volatility in all of these clean energy names, and I just decided to check out just because I don't want volatility to increase to the downside, especially if things are tightly moving sideways. I'll sit through that sort of stuff. But when you start getting a bunch of volatility in not just one stock in that sector, but like a bunch of stocks in that sector or in that sort of theme, I don't like to wait around and find out why. Usually you find out after the fact that, there was some kind of news or something that happened. So what else did we talk about? This one, APLT. Yeah, this is just a good example of things don't always go like you want. You can imagine when I got into this bar, it was nice and tall, and it just rolled over and died and stopped me out. And it didn't really offer much of a re-entry, so it's like I can sit here and kick myself that this thing is, it went up almost 60% from where I initially got in, but that's hindsight. I don't know why this thing gapped, but at the end of the day, all you can do is just take the trades and the opportunities that show up, and you're not going to catch every move. Is it this annoying? Yes, this is highly annoying, but I also have been trading long enough to realize there's absolutely nothing I can do about it. Fusion. I think this is the last one to talk about. But yeah, I mean, I think I posted this one on my social media, but had a good entry on it, put the stop there. Almost got stopped out of this thing. This thing was, I mean, like 20 cents from my from my stop here. Luckily, it didn't trigger it, and it reversed, so I was able to take a partial off. And I thinned this one out and closed the position out completely as this thing was selling off on this day here. So this one, again, this is like a double. It's a decent move. It's not. This isn't going to make a huge change in my equity, but overall, it's a good trade in my opinion. Looking at it after the fact, right now it's tightening back up again. So if this thing's able to break out, maybe I'll get back in this trade. So those are just some trades that I've taken in February, and overall, I think things are going pretty well. I'd love to get a couple more trades like SOUN, but I have no control over that. So last thing I want to do is just do a quick scan and just talk about some stocks that could potentially be setting up. So if you remember, again, my methodology here is I'm taking all the stocks in the universe of stocks. I'm running some scans to find stocks that have the right sort of momentum and liquidity and linearity and all this sort of stuff, right? You can't scan for news and themes, but you can scan for fundamentals. You can scan for trend, linearity, liquidity, volatility, momentum. These are the things right here that is going to take this massive list of stocks, and it's going to whittle it down significantly. Maybe you want to end up with maybe 100 to 200 stocks total. And then you take those stocks and you shove them through some sort of context and setup. I've talked a lot about AD Express and AD Extender. This is a typo. AD Extender. And then maybe a little bit of market situational awareness, and and setup context. Just to kind of take that 100 to 200 stocks and whittle that down to like maybe 20 to 30 stocks. And when I'm talking about the setups and context, again, these are the two main setups that I talk about a lot, because I mean this is just how momentum stocks move. And if you need to pause the video and just refresh yourself on when I talk about AD Express and AD Extender, this is what I'm talking about. And the main point of an AD Express is you have this upsloping ADX, and then within that upsloping ADX, you have a temporarily downsloping positive plus DI. And what that means is like you have momentum pushing this stock higher, but there's a temporary sort of consolidation. So when this stock chops sideways for a couple days, it's going to pull this DMI line down, but it's still going to stay above the negative line. And this is often what happens when you have this long sort of basing period, and it's the first thrust out of there when you get this sort of sideways pullback. That's what causes this AD Express pattern. And then AD Extender is a little bit of a longer setup. So you have the AD, so basically it's the same situation here where you have this AD Express push, but you end up having a longer pullback. So what happens is the pullback ends up being a couple of weeks long, and it ends up pulling back to in Dr. Schaap's case, the 20-period moving average. So whereas this was a short-term, maybe 2 to 3 to 4 day sort of pullback, this one's more of a 2-week. It could be potentially even longer than that. So you have an upsloping ADX, and this upsloping ADX starts to roll over, which means that this momentum has kind of subsided for a week or two and pulled it back to its 20-period moving average, and then you buy a breakout of this. And you can see it does it again. It pushes up and then it rolls over. And this other rollover, this is a second AD Extender setup. And that's why he has his add points, because like these are potential areas where you can look for additional entry points and additional. You can either add to an existing position, or if you swing trade, you can buy here. Maybe you're taking partials and selling here, and then maybe you can get back in a couple more times. And that's the whole point of AD Extender, is you have this longer term pullback to the 20-period moving average. as opposed to this really short term. It's just a couple day pause, 2 to 5 bars, and then it takes off again. Which is, that's why I actually made this sort of model, because again, this is just my observation. This is from me studying lots of different techniques and strategies from swing traders and intermediate term traders. Is, this is 80 express. Like, you have this short term pause after a move up, short term pause, or you get some sort of longer term consolidation, a flag, a wedge, a triangle, like whatever the hell you want to call it. It doesn't matter what you call it, just recognize that it is that pulls back. And this is the 10 period moving average, but if you imagine the 20, this thing would be nesting against the 20, and that's where you would get the breakout. That's exactly the same thing that this is referencing here. It uses different language, it uses different scanning criteria, but it's the same concept, which is the same as Kulamagi's his flag, channel, symmetrical triangle, whatever the hell you want to call it. Like, it's the same concept. So these are the patterns that Kulamagi trades. Looks an awful lot like this, which is why I use this setup, because this really mimics his setup very well. Dave Landry, strong move up, pull back, you buy on, as this thing resumes the trend. And again, if you start to notice, a lot of these traders, if you study enough traders, they might call it something different, but it's the exact same concept. If you look at Kell's cycle of price, EMA crossback, basin break, that's essentially, if you look at Dave Landry's move up, pull back, move up, pull back, basin break is the same thing as a flag. And if you look at all these different patterns here on the long side, and you just lay them over this cycle, it's all these things correlate really well. So just keep in mind, there's lots of different strategies and techniques and all these sort of things, but if you actually study these things together, you'll realize there's a ton of overlap with them. So as I'm looking through this pool of stocks, I'm looking for what essentially StockBee calls an anticipation setup, where you have this nice tight sideways range. You don't have any breakdown bars within that range. Again, this is another example here where it starts off a little sloppy, but then it gets really tight. Like, this is exactly what we're looking for, this tight price action. And then on the day of the breakout, we're looking for this. Like this, if you imagine if this was covered up, this is what happens beforehand. This is the breakout day. This is what happens beforehand. This hasn't broken out yet. So this is anticipating that potentially in the next day or two, this thing could break out. So that's the thought process behind what we're looking for here. So essentially, I'm just taking these stocks, I'm just flagging them. I think I flagged all these already. And then we just go through them. And as I explained in a previous video, if you take a short-term volatility figure and you divide it by a longer-term volatility figure, this is a really good way to see things that either have already moved or haven't moved yet. I use the 3 and the 20. You can use the 5 and the 20. You can use the a variety of different things. I would just make sure that it's not too close together. Like, you don't want to use like the 10 and the 20, because like those numbers are too close together. So you probably want to use something that's got more of a skew to it. So it doesn't really matter. All this is really trying to do is just help you separate stocks into different groups. So the idea is, when you divide this short-term volatility number by the longer-term volatility number, and if I sort these, the numbers on the high end are going to be stocks that have already made a big move. They've either gapped already, or they've had some really sloppy sort of action. But I can guarantee you, as I go down this list, all these ones on the high end are going to have already made some massive sort of move, which is why their short-term reading is so high. And sure enough, like Kodak had a massive move. I don't usually trade these sort of stocks. Like, if this is your bag, you want to trade these kind of expansion moves, that's great. I mean, there's probably some potential to trade these sort of things on a regular basis. I would just keep in mind that this sort of process of studying these stocks is survivorship bias. You're only studying the stocks that survived and actually did this sort of thing. Which, there's some benefit to that. You can see how these stocks acted, but in order to get a good holistic view of things, you need to study not just the stocks that worked, but the false positives, the false negatives, the ones that looked almost exactly the same and didn't do that. That'll give you a much more balanced perspective. So if you want to study these kind of stocks after the fact and just try to see like where would you have gotten in, where would you have exited, it's a good way to train your mind on looking and studying these sort of patterns. And also, if we go back to this model here, sometimes you'll find these sort of day one expansions as well. Whether it's an expansion bar or whether it's a gap, you might be able to use that to kind of cue you in on potential day two, or maybe you can find stocks that have had a massive move and then you're waiting for this next phase of maybe it's going to give you a couple of days of pause to kind of give an resumption of the trend. So there's a lot of ways you can use these. You can see this thing at a gap and now it's kind of tracking sideways for a couple of days. So maybe if this, if we just draw some like a flag here, maybe this thing will flag out and it'll give you some sort of flag breakout from this short-term range. So I'm not going to go through all these on this end here, but if you go from the lowest to the highest, this is where you start getting into these sort of compression patterns. So we have wish here. So this is what you're looking for. Like if you go back to this stock B setup here, like if you look at this, look how nice and tight the bars are, and they're tracking sideways. There's not a lot of sloppiness. If you go back to here, that's what this is looking like. This is the kind of stuff you're looking for. The problem is it's March 3rd, earnings are on the 4th, so this thing is probably tracking sideways and quietly because it's waiting to see what earnings are going to do. So I would expect this thing to gap up or gap down based on earnings coming up. So this is one thing that you could potentially watch. Same thing here, it's tracking sideways for a couple days, resting against this moving average. This could be another one that's potentially setting up. It's got a little bit of time before earnings, so this is of another potential. I've already talked about frog a little bit. It's tracking sideways for, what is that, 6 days now. I would love for this thing to break out and have kind of a high volume move. It just hasn't done it yet, so I'm kind of waiting, biding my time before I add to it potentially. So one thing I want to note about this process is just because it's on the low end here doesn't mean it's giving you a nice tight side. Like this tight sideways action is what you're looking for. This is just kind of like grinding up higher. So even though yes, it's on the lower end, this isn't what we're looking for. It's already moved up. If it's not trading sideways for 3 to 5 to 10 days, then you can immediately kick it out. It's not going to give you what you're looking for. Same thing here. I mean, this thing has already made a move. It's just kind of grinding higher. This is not what you're looking for. This on the other hand, it tried to break out Friday, but didn't really get going. But this is the kind of setup you're looking for. If this thing can break out, I think this is a really good trade. It's got plenty of time before earnings. So yeah, I mean, it's in one of the top sectors. This is a tech stock. Software stocks have been doing great recently. Again, this thing's been grinding up the last couple sessions. Not really what you're looking for. You see how sloppy this is, and it's grinding up. Kick it out. It's already moved up. Kick it out. This thing is tracking sideways the last couple of sessions, but you can see it's extended from the 10, it's extended from the 20. It's it's not in a good position for a longer term swing trade. Down here, when it's actually pulled back to its 10, this is the kind of situation that's a lot more favorable. Or if it's pulled back here to like the 20 or the 50, like these sort of points are much more favorable for a swing trade that you can hold for a couple of days or a couple of weeks than trying to get it when it's already kind of up here and extended and not really showing great price action. It's already extended. This one we talked about earlier a little bit, but you can see it's tightening up again. It's got a decent amount of time before earnings, so this thing, if it breaks out, I think this would be another good stock to focus on. It's a bit extended. I mean, it's sort of flagging out here, you can see, but I don't know. I'd rather it catch up a little bit to the 10-day. This thing was tracking nicely sideways, and now it's just breaking down. This day on Friday is not it's not good for the stock, so probably not going to do much. Tracking sideways, but it really would be great to build this thing out a little more. These sort of multi-week consolidations like this are a lot more favorable when they break out than these sort of short-term things. And that's kind of the difference with the AD Express pattern is, you know, if we go back to our model, AD Express patterns are really, really good right out, you know, of some longer term base or longer term downtrend. So if it's the first thrust out, these sort of short term consolidations can work really, really well. But once this thing has made a couple of thrusts upwards and then it's doing a short term consolidation, that's not really what we're looking for. You know, so yes, it is tracking sideways, and could it continue to go higher? Sure, but it's a really low odds sort of play to do something like that. Again, it's stretched up, doesn't have a sideways area there, so get rid of it. Get rid of it. Yes, it's tracking sideways, but like this thing has just been like a grind fest. This is not the kind of momentum stock that you're really looking for. SMCI, this one I regrettably missed. Just because of all the sloppiness of this thing. I saw this tight area here, and I saw it break out, and I just passed on it. And you know, this thing's up, you know, 18, almost 20% from where I decided not to get into it. So it is what it is. Stocks that are doing this sort of whippy, sloppy stuff, I don't know, you guys can have all that. So for now, it's a missed trade. We're going to talk about Palantir. That thing is looking broken after Friday. It's grinding up. Get rid of it. And so you'll notice the higher this number starts to get, the less likely I'm going to be able to find something that's actually a good, decent setup. This thing already broke out. This is looking pretty decent. This is really, really thin. I mean, this is on the thinner side, but I mean, this thing could potentially do something. Except earnings are coming up, so that's, yeah. That's the reason I have this number here is because I want to see when earnings are, because I don't want to be trying to buy this thing and then forget about earnings and then end up, you know, wake up one morning and the stock is 30-40% lower. This thing, it already broke out. I mean, there's a potential this thing, you know, can break out of this little mini flag here. It's already extended. This one's looking decent. It's starting, you know, you can see the lows are starting to get higher, and it's starting to build out here. So if this thing is able to break this downtrend line, it could potentially have some legs on it. And you can see the previous buys were decent on this thing. It doesn't really have much tight price action. It's already extended. So I'm not going to go through every single stock here, but I'm just trying to reinforce the thought process here. And again, if we go back to the model, we're looking for things that are either freshly have broken out and are having a short-term consolidation, or having a longer-term consolidation to the 10 or 20 period moving average. And you're looking for this thing to break out of this wedge, flag, triangle, like whatever the hell you want to call it. I mean, ultimately, we're looking for this kind of situation. Pulled into the moving averages, tightening up, breaking out. Or this, you know, or this. You know, that's why I have these models here, because these are really good visual guides on what you're looking for. You're looking for this. And then on the day of the breakout, you're looking for this. You want tightness. You want, and this, if you want to pause this and read this and understand this, This is Stockbee's criteria for what he's looking for in an anticipation setup. 3 to 10 days of consolidation or pullback. You want narrow range days. You don't want a bunch of big sell-off or breakdown days during the pullback. Low volatility, low volume, not up multiple days in a row. So I mean, just using this, even if you just use this criteria and this criteria, you're going to eliminate most stocks. And you saw we were doing that. Like most of these stocks we looked at are not tradable because they're not meeting just the basic criteria. You know, this might be something, but I mean, earnings are coming up. It's not really a great overall setup. And the last point I want to make is if you get to the point where like you barely have any setups that you're looking at, then that's another thing to be concerned about. It doesn't mean the market's going to fall apart. It just means like you don't have a lot of opportunities at that point. And if we go back to the market chart here, the reason there's not a lot of good setups at this point is probably because you know, we haven't had time. Like just because the indexes have consolidated doesn't mean stocks have consolidated. Some stocks have, many haven't. So don't look at the index charts and think that like every stock's going to align exactly with its movements, because that's not the way it works. So we went over the state of the market, we went over the sectors, we went over breadth, we went over recent trades, and you know, we kind of went over how to take a broad list of stocks and using just some very simple criteria, identify stocks that have potential to be traded in the next day or two. So just do this process every weekend. If you're new to trading, I would actually do this process daily. It's going to seem painful, but the whole point when you first start trading is not to make money. Stop trying to make money and start trying to develop trading skills. Learn what a good setup looks like. Learn, you know, where am I going to enter the setup? I'm going to enter it on this breakout. I'm going to put my stop under the lows. I'm going to manage the trade like X, Y, and Z. If you do those things consistently, then it's easy to look back and study your trades and improve that. If you find out that you're getting into trades too early and you're not waiting for the breakout, okay, like that's an easy thing to fix. If you find out that your stops are a little too tight and you keep getting stopped out right before the breakout, that's easy to fix. Move it a little bit further away. If you find out that you're not riding trends, like you're in the stocks at the right point and you have your stops good, but you're not able to ride a winning trade very well, then your trade management needs to be fixed. Look at how you're trailing things and fix that. If you're cranking your stops up way too quickly because you're scared of the stock stopping you out, but then you get stopped out and then it goes off without you, again, like you need to take just these basic frameworks and improve your process. Because at the end of the day, that's how you're going to develop trading skills. You have a set process, you get feedback from that process, and then you improve your trading over time. If you just do random shit all the time, you're never going to have any concept of how do you improve it. How do you improve random? Like you can't. Do something structured, even if it's not necessarily perfect initially, but do the same thing repeatedly, and then go back and study that. Like, was it good? Was it bad? How do I enter better? How do I put my stop in a better spot? How do I manage the trade better? And if you do just those three things over and over and over again, week by week, you're going to develop trading skill, and the money will come as a function of you developing skill. You're not going to make money as a trader just as a function of I just got lucky. Yes, you're going to get lucky on trades. You're going to get trades that are going to go up really strongly with you. But as a course of like long-term success and you hitting doubles and triples and a bunch of singles and every now and then you get home run trades and sometimes you get grand slams, like that's going to happen as a function of you executing a process and a system over and over and over again. So my last thing I want to say is just focus on building trading skill. Stop focusing on making money. And if you're not making money or you're losing a bunch of money, scale your trading size way, way, way back and just focus on developing skills. And then as you get confidence and you start to understand like, hey, I can do this. I'm entering trades well. I'm putting my stop in the right place. I'm managing risk properly. I'm able to manage these trades well. Then you slowly start bumping your size up, but don't start there. That's a quick way to go broke really fast. So I hope you enjoyed this. Like, subscribe, share this with your friends, and put any questions you have in the comment section. Thanks.